let's see, I'm going to bring in our next presenter now. Our next presenter is going to be Adrian Beales and Josh Ziegelbaum, and they are presenting for us today a luxury hotel development in Puerto Rico. When I first heard about this project, I was actually really excited about it because unfortunately, they're operating this offer under a non-disclosure agreement, so they can't go into the specifics of the name of the deal. But they did disclose the name to me, and I was really excited to hear about it because I have some personal history with this property. This is actually where my wedding rehearsal dinner was served when I got married about 11 years ago out in Puerto Rico. So Joshua Ziegelbaum is here with us now. He's the Vice President for Capital Raising and Business Development at Lifeafar Capital. Joshua, if you can unmute your mic and say hello real quick. And then there's Adrian popping on now. Adrian Beales is Director of Sales at Lifeafar Capital. So gentlemen, how are you doing today?
Good, Jimmy. How are you?
Very good, very good. So if you want to start sharing your screen, we can get underway here.
So thank you, Jimmy. Thanks for having us. So just to give you guys a little bit of background, Lifeafar Capital, we're a boutique hospitality asset manager based in Latin America and the Caribbean. This is actually our second Opportunity Zone project in Puerto Rico that we'll be presenting to you today. My name is Adrian Beales. I'm the Director of Sales. I'm originally from Australia. I've been living and working in Latin America for about 3 years now with a focus on Puerto Rico. And also I've lived and worked in the United States and Canada and other parts of the world.
Thanks, Adrian. Hi, everyone. My name is Josh Ziegelbaum. Happy to be here as well. I serve as Vice President for Lifeafar, and I'm currently based in Miami, Florida. My background is in private banking and wealth management, primarily in the New York and Miami area. And we're going to be taking a dive into our second Opportunity Zone investment offering in Puerto Rico. So what we're going to be touching on today is an overview of that offering and some financial details. We're going to touch on the state of tourism in Puerto Rico. We're going to talk about our development and management team, the impact that the project has on the island of Puerto Rico for the local economy, financial projections of our open offering, which is very important to you guys here today. And then we're going to do a brief summary and open up for any questions and provide you guys with our contact information for any follow-ups.
So the project overview, as Jimmy mentioned, we have an amazing asset, and it's such a shame that we can't actually reveal the name of it today. But what I am going to do is I'm going to show you our first Opportunity Zone project in Puerto Rico. The reason I want to show you this is it shows you our track record in Puerto Rico, but it also shows you the type of assets that we are looking to do. So this asset right in the middle there is called Plaza Cologne Hotel and Suites. We get to launch the actual branding of the hotel once it starts operating late next year. But as we cap raised, it was Plaza Cologne Hotel and Suites. We raised the money for this in late 2018, early 2019. We raised about $10.5 million of equity from our own network. We're doing about $9 million of bank financing. And we had a projected cash-on-cash ROI of 14% and 19% IRR, pre-Opportunity Zone. And we're turning this building, it's a 40,000 square foot building. We're turning into a 60-bedroom boutique hotel, as well as 6,000 square foot restaurant, food service in the bottom level, and a 6,000 square foot rooftop bar. So it's a really unique asset, and we actually think that the next asset is more iconic, but we can't reveal it today. But if anyone who contacts us, we can send you the NDA, of course, and send through all the information. So a little bit about the second project. Well, it is an iconic hotel. We did pick up the asset at distressed asset pricing. It's a redevelopment and expansion plans. It was a boutique property under 20 keys. We intend to take it to about 60 keys. We want to maintain the storied past of the asset. We also want to bring it to a new level. So add new levels of service, a couple of extra functions, things like a spa, a couple of additional restaurant spaces. And as you can see from the reviews on screen here, it's a really well-received property by international guests and also local guests. It actually gets about, well, it had about 20 to 30% of its demand traditionally from locals on the island, and about 60-70% of its demand from international guests. And by international, I also mean people coming from the mainland United States.
So a bit more on the specific project that we have available for investment. The project budget is around double the size of the San Juan deal that we showed you, Plaza Cologne Hotel and Suites, but it has a similar room count. So we're going for around 60 rooms with the expansion plans. What we're raising from investors is the equity stack. So we have $19 million in available equity for investment. The debt component, we use traditional bank financing. And we're relatively conservative in terms of our leverage at 50% loan to value. And it's important to note that we structure our deals as single asset funds. So investors will specifically own interest in this luxury hotel resort project. They wouldn't have exposure to the San Juan Hotel or any of our other assets. We like this, and we think it sets us apart because investors have the choice of which specific asset they'd like to invest in. As far as forecasts, we have projected return on investment of 14% annually. That's net of fees, and then 28% projected internal rate of return over the life of the investment.
So, as Michael, the previous speaker, mentioned, obviously, like a lot of firms, we like to go conservative on our forecasting, to minimize the downside and maximize the upside for investors and ourselves. I'll give you two examples of how we're doing it in this project. One is that when we open the property in Q4 2022, we're projecting a 50% occupancy, even though the market average is about 71%. There's tax credits that we'll get into a little bit later, where you can get up to 40% of the project value back in tourism tax credits in Puerto Rico. We're only forecasting 30, even though we're applying for 40. So obviously, if we can get the 40, there's additional upside for investors. The independent advisory. So on the island for our accounting, we work with Grant Thornton, but with the COVID-19 pandemic over the last 3 to 4 months, we've been working with PKF Hotels, doing an independent advisory and feasibility study on the project. And the returns that we're looking at today are based on their returns, but on the work that we did hand in hand with them. So we have an 8% preferred return to investors, 8% hurdle, and after that we have an 80-20 carried interest. So that motivates us because we have a bonus to achieve there. But we're also co-investing, and I think that's really important that we actually have our cash on the line too. So we really believe in the asset, and we're aligned with investors. So 10% we're co-investing in this project. 100K minimum investment. And I'm going to tell you a little bit now about why Puerto Rico. So Puerto Rico, prior to COVID-19, had upward economic growth. Obviously, for travelers and investors alike, there's no currency risk. It actually has a really, really strong pharmaceutical and biomedicine industry. Manufacturing is actually the biggest industry on the island. And there's a variety of different tax advantages for businesses and investors alike to come and invest in the island. But they're really making a big push and a play to tourism. And Josh will talk about that in a little bit. But they've been doing this for several years now, where they're pushing for tourism. Because you look at, say, Puerto Rico compared to the Dominican has 17 to 20% of their GDP as tourism. Puerto Rico is like 4 or 5%, and yet they've got amazing beaches, amazing historic old city. They've got the only natural rainforest in the United States. So they're doing a big push for tourism, and it means that there's incentives at the project level, which go back to investors for tourism operators.
So a few more points on tourism before we move on with the presentation. Almost 90% of the inbound flights to Puerto Rico over the previous years have been from the mainland US. So there's a tremendous amount of demand from Americans for Puerto Rican tourism. There's been strong tourism growth over the previous years on the island, not only from Americans, but local Puerto Ricans. And as Adrian alluded to earlier, the hotel that we're redeveloping, which we're raising capital for now, it's an iconic asset and it's very well known on the island. So we believe we're well positioned in a post-COVID world with an influx and domestic focus on tourism, particularly in the high-end luxury market, which is where we're operating in. And there's been steady increases in average rates, tourism growth, and an overall shortage of hotel rooms. So if you compare us to other Caribbean islands, we're significantly lower in room count, and there's a lot of demand on the island that we're trying to meet, and we believe we're highly well positioned in order to capitalize on all these trends.
So just quickly on tax credits and incentives, I'm only going to focus on one, which is the top one there, the tourism tax credits. Essentially, in a nutshell, you can get up to 40% of the project cost back in tourism tax credits, which you can sell for 90, 85 cents on the dollar. If you're doing a redevelopment or a development of a tourism asset project and business in Puerto Rico. Obviously, there's criteria that you have to meet, but it makes it very, very interesting because that allows companies like us and projects like this to achieve, really good returns without utilizing a lot of leverage. And it shows, I think, from my opinion and my perspective, it shows how positive they are as a government pushing towards tourism and how they're really supporting the industry. So a little bit about our team and our management team, and I won't go into all the individuals, but we've got a diverse background of people with decades of experience in different industries. Anywhere from top tier accounting firms like PwC to top tier law firms to major hotel operators. So a really diverse group, and all have invested in, or not every single one, but majority have invested in Lifeafar and Lifeafar projects.
A bit on the impact that the project is having locally, economically speaking, on the island of Puerto Rico. So first and foremost, we have development and operational impact. So we're going to be creating 200 plus construction jobs over our 24-month development period, and 100 permanent hotel operating jobs. And we're going to source that employment locally on the island and be a major employer on both the East Coast and, on the West Coast, as well as the San Juan region. So we really want to have a robust training and career development program for locals. And we really want to give back to the community. That takes us to the next point on economic and environmental impact. So we expect to bring 10,000 plus guests to the property on an annual basis. And this is just the one hotel that we're talking about here. And the result of that will be indirect jobs. Now, what does that mean? Well, people come to our hotel and they spend money on rooms and food and beverage and other services, but they also go out into the community and they frequent shops, restaurants, bars, and those activities result in indirect employment. And separately, we're going to be, or additionally, I should say, we're sourcing local produce, meat, and fish for our restaurant venues from the island. And we're going to be implementing some sustainable environmental practices in the overall development and execution of our project.
So a little bit on the financial projections before we move into Q&A. So what do we think we have here? Well, we think we have an institutional quality asset. We have exceptional returns. We're opening Q4 2022, and really that's been very lucky for us in the sense that we're very confident that by Q4 2022 and obviously Q1 2023, that tourism would have stabilized back to pre-COVID-19 levels. So there's a bit of a silver lining there for us. We've got relatively conservative assumptions when you look at the debt, for example, and the beginning occupancy. And there's a variety of local incentives, and we can make a local impact. I mean, with the jobs, 95% plus are local jobs. Even when you're looking at hiring for a general manager, which is a really high paid job, that's the one job where you could look outside of the island, but there's a lot of talent in the tourism industry on the island. So it's a really good project in our eyes.
Yeah, so in summary, I mean, we have a project budget, $38 million. The bulk of that is in the value add component through redevelopment. What we're raising from investors and what we have available is a $19 million equity offering with a projected internal rate of return of 28% annualized. That's pre-opportunity zone, projected return ROI of 14%. Our minimum investment is $100,000. We obviously have a very brief moment of time to present to you guys today, but we'd like to turn it over for any questions the group may have. And we also have our email address, which can be found at the bottom of the slide here. Feel free to reach Adrian or myself at info@lifeafarcapital.com. We'd be happy to set up a one-on-one call, send out an NDA so we could share the details of this exciting offering. And we're happy to invite you to invest alongside of us in this moment in Puerto Rico.
I've seen the details of the offering, and it is really outstanding. And again, I have the personal connection to it, which I love. When I was there 11 years ago, it was just a beautiful piece of luxury beachfront property. It did fall into disrepair, especially with the hurricane damage. I'm really happy that you guys are redeveloping it, and the impact that it's going to have on the community with the jobs and the boost of the economy, I think is going to be really crucial as well. We do have a few questions. By the way, I did just post a link to lifeafarcapital.com in the chat pane there. So if you can click that, it'll take you right to the offering and you can request more information from Josh and Adrian. We got a question here from Mitch. He asks, what if you are not able to raise the entire $19 million?
Yeah, so I'll take that one. I think I could see the first three. I mean, we started raising this one privately a little while ago. So we've already raised some of the money, not the entire 19. I think if we weren't able to raise it, obviously we could seek more debt capital, but I do think we will raise it over time. We don't need all the capital straight away. So it actually leads probably into not the next question, but the third one, which is Mitch again about the prospective debt terms. I'll just answer that one now. We're generally about 1 percentage point higher than mainland US. So look, for the construction loan, for example, we're looking at about 7.5% interest rate and a 6.5% for the ongoing leverage.
Good. Let's get to Randy's question here. On your previous slide with the projections, is the 28% IRR, is that projected gross or net? And if it is gross, what would that net IRR be?
So it's net, but let me clarify this a little bit. So we've been working on a reforecast because during the last 4 months, obviously we worked on that feasibility study with PKF Hotels. The 28% was PKF's actual forecast, and we're about to relaunch ours next week. So we're going to provide a few different scenarios because we also have investors who don't have capital gains who invest in the project. But the current one that one is net.
Good. Eagles asked this question. This question came up before you got to that last slide where you went into this in a little bit of detail, but let's ask this question anyway. He says, COVID impacted tourism, cruise ships, lockdowns in Puerto Rico, and there is still a lot of recovery needed from hurricanes. How is this factored into your projections?
So the first thing, I suppose, and we talked about it a little bit, being quite lucky that we're opening up in 2+ years, but probably the most obvious thing we're doing is the conservative forecasting around occupancy. So a 50% occupancy in year 1, and we're not scaling that. We are scaling it over the next 4 years, but very gradually. So 50, 55. So we're going conservative on occupancy. That's probably the biggest thing. We obviously also look at having a larger reserve of capital in case you have assets go offline for a longer period of time, and certain insurance policies for hurricanes. I don't know if that answered the question, but
well, if Eagles has additional questions, he knows how to get in touch with you, Adrian. We'll get to 2 more questions here, and then I'll cut you loose, Adrian. We'll take a quick break before our next presenter. Guillermina asks, how many investors are you looking for these projects?
I mean, no, you go, Josh.
Go ahead, Josh.
Yeah, I mean, we have a $19 million open offering, and the minimum being 100,000. If everyone came in the minimum, the max we could do is 190 investors. But historically, most of our clients come in around the 250 to $1 million level. So if the average ticket were around 250, around 75 investors, more or less. And keep in mind that these investors are not associated with the first project. They would only have exposure to this single asset.
Excellent. And then finally, this one comes from Michael. He asks, what are the risks associated with working with the local government? That has been one of the biggest questions that I've run into from other investors.
Yeah, I don't know if I'd say there's bigger risks with working with the local government. I'd say what we've found in our experience is things move a little bit slower on the island. And obviously it helps a lot having local staff and bilingual staff. Even though you can do a lot of things in Puerto Rico in English, it does help having Spanish speaking staff and local staff. But I would say the biggest risk we've had is just the time some things take. With our first project, obviously we've had delays because of COVID-19 and the shutdown that they had on the island, but certain government departments work slower than what you'd be used to in the mainland US.
Excellent. Well, we're going to cut it short there. Actually, we went over a few minutes, so more power to you. Adrian and Joshua, thank you very much for presenting today. Fantastic deal you have there.
Thanks, Jimmy.
Thank you.